Because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, folks, we're going to switch our operation over here to the gold market today because we've had a really big move today, up about, quite a bit, of more than $50. But you notice here, we took out these highs right here, just matched those highs. Then we backed off exactly to the 382 here, right on the open. There's your opening of the New York Stock Exchange. Took out the previous low right here by just $1, and then it took off. Now, folks, here's where it exploded, but at this level right here, you see where it moves from this high to this low right here. John Hill, who was my teacher, he called this the yum-yum trade, and I'll show you why. If you notice here that everybody, and it's really strong here for several reasons, but there was your 78% retracement right here. And John said if this thing gets above that level, that means it's going to go a lot higher. Once we take this out, look at this, folks. In this bar right here, we went from 47 all the way up to the next bar at almost 87. It moved $40 an ounce in just a matter of 26 minutes. You can't stand in that. And look at this. There's no pullback at all this morning. The little tiny pullback we have is from 89 down to here, $12. That's absolutely nothing. If you just to measure that from your low up to your high, that's not even close to a 382. A 382 would be down in here. So this is acting like, it wants to go a great deal higher. Now, we were talking about this a little while ago here on the, hold on, we'll get up here and take a look at it here. This is the AI program, and you can see it's still going up, and it should top right about the end of the show. So that's in about an hour. So let's see if that happens. But it's been following along pretty well. So I can't say that it's not going to do that. So let's remind ourselves that's what we're watching here this morning. Okay, now we'll get this out of the way. And I wanted to talk just a tiny bit about a couple of the other metals. And they're very important because they're starting to really pick up speed. Speed, Larry. Let's try to get the words correctly. Now, here's platinum. Now, look at platinum today. This is the intraday on platinum. Boy, I have to look at this, folks. This is platinum today. Look at this. This is where it is. There's the opening right here, or early in the morning, okay? And away it goes. But there's just no selling through here at all. I mean, it's just virtually nothing. Look. Just goes. There's no place at one tiny little pullback and higher, tiny little pullback and higher, tiny little pullback and higher. And you look at this on the daily, you're going to see here that we have really exploded to the upside in this area right here. The first alert here is when we took out these highs right here. This thing, look, they opened a little bit unchanged, and then away it went. It was giving an indication that it wanted, sorry, boys and girls, it was giving time out. I need to take a little drink here. Folks, this is the 20th of May here in Tucson, Arizona, and we have not had a 100-degree day yet in the whole year. And folks, let me tell you that is an outlier event. We've never had a month in May in the history of since 1865 where we've not had a 100-degree day here in May. So we're in a cold spell here. It's 96, but 96 for us is very, very balmy. Okay, look at the breakout here in this platinum. Now, let's take a look at silver. And I mentioned silver several times in the past because it was starting to look actually pretty bullish. And as you can see here, we have the same thing going that we had here. There was your pullback in silver early this morning. You can see it backed off right to the exact 382, just like we did. And here we are right now making the target up here at 33.16. If we look at this on the daily chart, a weekly chart, folks, and I've been involved in silver for a very, very long time, but There's the long-term weekly going back to 2011. There's a 61% retracement. If we get above $36, $35.80 is the old one, we get to say $36 above that, folks, you can see silver going to $50 or even $100 an ounce. That's what it's got the potential. You see this low right here? That was off the low right there. That's when we had the pullback in gold, okay? When it went to 31, well, this is many weeks ago, right around April the 7th. That's where that April 7th low right here. That was a 382. This is when we had the low at gold had gone to 3205, you remember? And it broke down to 29.85, dropped $240, and then it exploded. And the same thing happened here, to the silver market. So silver getting above here, maybe it's going to be hyperinflation or not. That I don't know. These are things beyond my pay grade, but those are the ones that I'm watching here as far as, taking a look at these things we're watching here so far today. Now, the next one we want to talk here is crude oil. Let's just do natural gas because I suggested a short sale of natural gas here and it's not working. Let's just get up here and we're going to do this on the daily. Okay, because where is the darn thing? I think we did that on the hourly. Yes, we did. There was the hourly right there at 38. We're now trading at 40.60. The stop has to be above here. That's a 382 off of the high way back in here. So right now it's got a $250 loss in this. So keep your stop working above this level right here on that. So, and whether it works or not, we don't know, but that's what's going on. Okay, now let's move on over here, and we want to talk about the cattle market because we had the best trade and the worst trade. What was that? F. Ski Scott was the best of time. No, that was what was the guy's name? Oh, doggone it! What was his name? It was the best of times and the worst of. I think that was F. Scott Fitzgerald. But God, I'm trying to remember the book from the Great Depression. It'll come to me in just a second. Hold on, folks. All right. Okay, we are right now. You can see here in the wheat, we are exactly a penny away from the 61% retracement up into this area right here. And then I recommend getting out of it here. And that's just all that is, folks, is just booking some profits. That's all that is. Sometimes you have a good one once in a while, and that's what you're looking for. So that's what we're going to be watching here for the rest of the day here and into tomorrow. Who knows? Now let's get up and take a look at the stock market because we had a real interesting pattern forming here in stocks. On the earlier show that I did for Steve Rhodes, I'm doing the 8 o'clock show for Steve Rhodes all this week and next week till he gets back. So if you want to listen, I try to not do the same stuff, but some of it I have to cover because it's very, very close to what the market's doing, and I try to keep this up to date to look at it. But let's take a look here at the bonds because we'll be right back here. We'll take a quick look at the bonds here. So hold on.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Okay, folks, this is the hourly chart of Treasury bonds. We had a big break from 14 down to 11, 3-point break, matched this high from back in January, and we had a really strong rally up to the 78% level, and then we had the big break this morning, and you'll notice on the way back down, it came down to this level right here. When I was doing Steve Rhodes' show just a little while ago, a few hours ago, we were watching this on a smaller time frame, and what we were seeing here, I'll just get this, I think it was a 13-minute, let's just double check, I'm pretty sure. There it is right there. We were saying this was a good 382 retracement right here. That's where it was at 20, and if you were risking 10 pips on that, which is $360, and it made more than that. There was major risk. So no matter what, the worst would have happened is you'd be break even, but there would have been your first profit objective right there. It only went against you 2 pips. So it dropped from that level here, it dropped 14 pips. You're looking to to make at least 10, which is $360, and you'd still be in a profitable position if you had it now. But right now, this time of the day, you still have a chance you could make another ABCD. This could be a trade for tomorrow. Maybe even later today you might get to it because you've got 3.5 hours to make that level. So, but anyway, you make that profit. You know, you can't risk more than 10 pips when you're doing something like that, because you sell it to 382, you put your buy above the 50%, and that's what you're looking for, is that first goal. And that's really what you have to do if you're doing short-term trading. The $64 question is, when it starts down like that, how do you enter? Well, you look for a 382, but you see here there's no entry here right away. The only way you can do is just sell lower lows until it stops doing that, and that's right there. Just keep selling lower lows, and that'll work for you. Look in the gold market. If you had been buying higher highs in gold, you could have made a fortune, but that's a lot of money to risk when you're sitting there looking at this. All right, so that's the real key to what we're watching here. It's not how much money you make, it's how much money you don't lose. Now, we were talking with Steve here as we were back here just a minute ago. Well, I want to show you where we were here with the E-mini S&P. There's where we were. And we were expecting the market to be making a bottom down in here. There's the bottoming coming in, but you see how it switched right here? This tells you that the market has basically inverted from this time here in the last hour. So what I have to do now is I have to flip this over, because that's telling you we're making a high right here. So if I flip it over and invert it, that'll tell me that we're making some type of a high. I just hit the inverted here, and all it's doing now is it's showing the vibrations of what's been going on. And there's your high coming in right about here. That means that we have the bias isn't that bad, because it backs off just a little bit and then it goes back a little bit higher. So that's what I'm trying to show you when we're watching these things, because I personally believe that we're over some type of a pretty big high in here. On Thursday, we've got Norm Winsky coming in. Tomorrow we should have PT, Paula Webb will be with us, and then on Friday we've got Stan Harley. So we'll be watching, and of course Stan is bearish longer term, but he still thinks there's a possibility we could rally a little bit higher, and we've certainly been doing that. Here's where we are right now. We look at this on the long term daily pattern. You can see we've gone up way above, and we're still going higher. We made a higher high yesterday. Your higher high yesterday was at 87. At 92. Today's high, which was really early in the morning, 93.50. We're now 30 handles below it, but there's no reason to think that we can't, go higher. Now, you'll notice on this ABCD pattern right here. All right, now I didn't extend this out. In other words, we've got a gap in here, this big gap. When you see a gap like that, you have to extend your pattern to the 1.27. So as I mark this off, take this up here like this, we'll get up. But they make this a one. Boy, the frogs are coming out today, folks. Sorry about that. That means we could get to 60.11. Folks, that's only 50 handles from where we are right now. And the slightest bit of news of anything will get you to that level. But we've made all the other levels. In the NASDAQ, I'll go through each one of those. I did that in the newsletter over the weekend because they all completed. The only ones that have been going up higher right now have been the Dow Jones and the S&P. The NASDAQ did not. I don't believe it did. Let's just double check. Yes, I did too. Hold on just a second. There's NASDAQ. I want to get the daily NASDAQ up on this to show you. I think we did. Yes, we did. We certainly did. We took out that high. Let's see if we had 1, 2, 3, 4. See, the high here was 25.44, and this was 25.62. So this took this out for, let me see, that's 1, 2, 5 days. We made a 20-point higher high. Look at these highs in here, folks. Somebody's selling up in here. I don't know who it is, but that's what it's showing you. Now, that doesn't mean it can't go lower, because it certainly can, but we're going to be watching it here as we watch this thing unfold here for the next few days. But there's a big Bradley date coming in here on the 22nd. That's 2 days from where we are right now. And then, of course, we have the Labor Day. When is that Labor Day holiday? I have to check it this week. Oh, you know what? I believe it's next Monday. Nope, it's this Monday coming up on the 26th is Memorial Day holiday. That means Friday, the day, and we're having live trading on Friday. Friday before the holiday is going to have a really high positive, because you're up in an up week and an up month and up, it means you're going to have a high bias for a possibly higher high in the S&P at that time right there. So that's what I'm paying close attention to here this morning. Now let's move over and cover a couple other little things that we need to cover here. I think we just about hit that 61% retracement in the wheat. I haven't. So this is a March wheat. You don't want that. We're into December, so we'll get these out of the way here. And that's not that to that 93. Okay, now we covered the bonds, the Russell. Okay, now here is the Russell, folks. I recommended the short sale in the Russell right here on this. This was on Sunday. We broke down, rallied up to this level right here, which was an exact 382. Okay, and from that level, you can see we had the move down, went right down to the target, right in here, and you can see there was a really good place to cover from that level. And I said you can cover part of your position here, or all of it, and what you have to do is you have to put your stop 10 points away from this level right here, 2107. So that stop is at 2117. 2107 was what we were looking for, and then 2107, I believe it's 2107. I think that's right. Anyway, the stop was at right above these levels here, which would have been 21.17, which is $600. Now, on the since that time, since Monday, the pullback you see was just very meager. Let's just go to a hourly chart so we can see it unfold a little better. There it is last night. So we came down to this level right here. Okay, there was your sell, and now you're above it. So we could be looking at another ABCD to the upside. All we did this morning after the big sell-off, which if you want to call it big, it wasn't very much, we just pulled right back down to the exact 50% level and held all day long, and we're still going higher. This tells you the market still wants to move higher. Now we've got a small ABCD pattern right here, right now in the Russell. Let's just draw that in, and we should look at that with the S&P too. But there's your ABCD leg. It's already above it. No, you don't want to mess with this one. This looks like it wants to go higher, folks, so be careful here. Well, always be careful all the time. We'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors. This portion of Trade What You See is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Okay, it pains me a great deal to talk about this one, folks. This is cattle, and as you know, we got stopped out right there before the $4,000 break. This happened so quickly. You can see here, there was just no way you could have got back in the market because it was just too quick. Anyway, we had an order. We had the ABCD here, and I lowered the stop, folks. If you kept your stop working at 1560, you were okay, 115.60. But if you moved your stop like I did, right above the 1.618, then that's it. That was my fault, and then I take full responsibility. Had everything that you wanted for this. We saw the daily. It was everything that you needed to do, but once we exceeded that, I was assuming maybe, and there was news out there about feeder cattle. Doesn't make any difference. Made a mistake. Got to move on. I remember on that daily chart, boy, it had everything you could ask for. You got just bing, bing. Biggest volume day ever, folks, in cattle. And it's a huge move up in this area. When I was trading at Drexel back in the 70s, 1978, 79, cattle got to 100. That's 208 right now. When it got to 100, the housewives in the United States went on strike and wouldn't buy meat for a week. Well, cattle backed off about 6 or 7 cents from 100 down to about 95, stayed there a little bit, and then continued to go higher for the next 40 years. So it doesn't always work that way, but that's what's happening. But cattle used to be trading back in the 70s, was trading at 90 cents, and now it's more than 100% higher. And that's not very much considering how much some of this other stuff is so much very higher. Okay, I mean, that's a main thing of why we're watching some of these things unfold here. Now, we also were talking about last week about the hog market, and I'm not going to put an order in on this. I just want to look at it. I haven't traded hogs in a very, very long time. But get the little piggies up here. That's what the HE, there they are right here. Let's just see what it looks like, because we should be reaching a level here in the pigs, and we got it. This is what we're watching. Now, this trades very well. It's in the hedge fund guys trade a lot of this. That tells us that we're going to take this out and get up here about this 105 level. Right now, we're trading at 99. It's not showing any bearishness out here at all. If you notice the last pullback that we have here, let's just clean that out so we can see it. The last pullback that we've had here just barely made a 382. There it is right there. There's your 382. High probability we're going to get up into this area right here, folks. You can see there's nothing negative about this hog chart at all. If you look at it over the last few days, that's where we're going at 105 level. There's a whole bunch of numbers up there, so that's what I'd be watching here with the hogs, and we'll be following it. But right now, we got to wait and see what happens here. Not a signal, just watching and looking. That's all we're waiting for. Okay, we'll get rid of this, which is the cattle. Now, I'm going to cover a couple stocks that I covered when I was on this show for Steve Rhodes earlier this morning, because they're really, really super critical. The first one we're going to look at is Tesla. And we'll get up here and take a quick look at it right here. And I know there's a lot of stock people that do listen to this show, but boy, this thing is really, really ready. This is it right now. And here you are. There's where you are. You see, you made a high over the last 4 days. You made a high right here. The number is at 351.17. The high has been 354. That was done earlier in the morning. There's your A, B, C, D leg. You have 5 days up in the AB leg. You've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days up in the CD leg. Okay, so, and this is the ABCD, so this is where it should be sold. Now, this means it could gap either way, but by golly, this is where you want to look. We've gone from 210 to 350, folks. From back here on April the 7th, we were trading at 210, and now we're at 350. You know, that's a huge move, as we all know. Stocks have been going straight up since that time. So there's a main thing that we want to be watching here as we watch this here unfold here so far today. Now let's move over here and look at, this is my favorite, okay? This is my favorite short. If I were selling stocks, this would be my favorite short sale. Just a second here. Starts with a G, ends in a G, and that means it's Google. So there's Google. We want to get this up on the long-term weekly because this is a beauty. If you like head and shoulders pattern, folks, this is the one. All right. Now here's head and shoulders. There it is right there. There's your left shoulder. There's your right shoulder. See how it's much lower? That fulfills the first part of the head and shoulders pattern. The right shoulder must be lower than the left shoulder if you're bullish, higher than the left shoulder if you're bearish. That number comes in at 169.86. The high so far has been 170.65. We're within 2 points of that exactly 61% retracement. So there's the sale right here. Okay, that would have been today, right at 169 and change. Now your stop on that has got to be 3%. So you take 3% of 169. That's going to mean your stop is going to be happening at 173. So you'd put your stop right there. I'm going to write this in here at 173, 173. That's where the stop would be. And if it hits that, of course, these things gap, as you know, but that's where your stop would be. That's just $1 stop because you don't want to risk very much. All right, that's the key. I mean, you could make it higher or lower, but all I did was multiply 3% times the 168. That gives me $4. There's where we are right there, 173. All right. 69, 173, $4. That's what we're watching. Now, we did the same thing with Goldman Sachs. If you remember, the Goldman Sachs, get this up on the daily, and we did the same pattern there. And that one worked pretty well. And you can see it's down $10 from where we sold it. Let's look at it on the intraday here, and we'll see what we're doing. So we sold it up here at 16, okay? And we're now down to this level right here. And it didn't do very much. I mean, it's backed off a little bit. Well, it did break all the way down to 595 yesterday. Today's low has been, what's today's low? One second, make I get this right. Today's low has been 19. Yeah, today's low has been $600, but that's it. So your stop would still be at 622. Okay, we sold it at 616, 620. Hey, a $600 stock, and you're only risking $6. Are you kidding me? That's mother God and country stuff. But there's what we've done so far today. There's today's high right here. Well, that's yesterday's high. Nope, yesterday's high was way back here. So there's your high, 612 was that level right there. There's the sale right there, 616, and that's where we're looking at. Let's looking at a smaller time frame. You'll see we've had a pretty big move. There was our sale right here. Then we had the big break, and then you can see here, this came down, would have made your profit objective many times because we're only risking $6, okay? And from there to there, okay, that's $23 right there. That's 4 to 1. And then since it's rallied today, you can see it's drifting lower. We got lower tops in here, so this tells us that it's still not going up. At least that's my opinion. So we'll be right back, folks. Stay with us, please.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, folks, this is December corn. This was going to be our trade of the week this week for the newsletter. We came in here on Monday. It looked like it was going to be. There was Friday. There was Mondays. You didn't even take out the low from Friday yesterday, and you rallied 16 cents. Broke. I mean, this is telling these folks something's happened to corn. They start to like it finally. But this thing is really looking good. Now, the only way that I think a person could have entered is that if you were to draw a valid trend line, and that would be one like this. The valid trend line means that if you make the 78% level right here, you should make the 78% level right there, and that's where the breakout would occur. So your breakout would have occurred right here at 46, or well, either 45. This is where the break's right here at 46. That would be the breakout in December corn. So I'm watching that for a pullback now to see if we get that. Now this is just one really big day, and it could be the fact that wheat's pulling everything up. That could be because wheat's much stronger than corn, and it's acting pretty good. But the grains, folks, this is the time coming into Memorial Day weekend. We got June, July, August. Those are the 3 months. And if we get any really hot, dry weather, and believe me, I don't know about hot weather because we haven't had any here in Tucson as of yet, but maybe the rest of the world will be. I don't know. The climate changes all the time. All right. Let's move over here and get that out of the way, because keep an eye on buying this, because and meal, the same thing. I really like that. I've always liked meal. If you look at December soybean meal, this where we are. We're still low considering where we were. Let's look at this on the daily so you'll be able to see it, that it looks really powerful because you've got all this buying in the air. It couldn't take clouds. Now, the nearby July meal almost took out these lows right here, and we still might. But this is what we're watching here right now. I'd like to see some bad news in the meal to get it down one more time, down to this level of 298. Let me just get this to show you why I'd be watching it right here. There's the level that let's just clean this up a little bit here. And this is the time, because we got this big weekend coming up, and this Memorial Day weekend, on Monday, you got to watch out what happens on next Tuesday, because that's when the old party could really start. That happened in '83, right after the Memorial Day weekend. Now there's your pullback right here. You see that 786 all the time. What I'd like to see one more time, I'd like to see this come in here Tuesday with really great weather or some news about tariffs, whatever, and see it get down here one more time. That's what I'd like to see it do. Now, I don't always get that, but that's not far away, folks. That's only $1,000. And with bad news, you could easily get to that point. But this is the time, March or May and June, is where you want to be buying grains. You don't want to be selling them. You want to take the other side of the trade and play for the weather. And that's what we're watching here as we look at these things unfold here. Okay, so that's what we're watching here with the soybean meal. So keep an eye on that. Looks pretty good. Also, we want to be watching December soybean oil. It's the same thing. It's acting pretty good. You can see here's the action today. That's the weekly. Hello, Larry. Get the daily up so everybody can see what you're talking about. Here's what you want to be watching for in December oil. Because we had this big run up here, all these ABC, 3 drives to a top. Remember, we had an order setting in here. The problem was it didn't get filled. And then in the aftermarket, bada bing, bada boom. You can see we had that tremendous drop. Well, that's 4 minutes. You got to go back to the hourly chart to see it. Just a second. There it is. There it is right here. Happened 5-6 days ago. We were trying to sell right there. And in the aftermarket, we didn't get there. And then when it opened in the evening session, at 6 o'clock New York time, bang, and it dropped a lot, folks. 4 cents, $2,500. You can see all we're doing now is we're banging up against the 382. So it's still a little bearish in here, but we want to get along this if we get another ABCD to the downside at the 382, and that level on the daily will be down here at 47.37. That's down 2.5 cents from where we are right now. That should be very, very powerful. So watch this. 47. I've got the beeper in and everything to tell me when we get to that spot, because it looks got a real chance of making that. All right. So that's what we're watching here in the soybean meal. Oh, a question about another stock. 1 second, I'll bring it up. We did Goldman Sachs. The stock is JP Morgan. We'll get it up here in just a second. We've got 2 stocks to look at. First, we'll look at JP Morgan. And there we are right here. And, wow, it had a sell-off. This is weekly. Shut the front door. Why that is, I don't know. There's the hourly. See, it's been going up pretty good here. Let's look at the daily. It's just not backed off much at all here since the 7th. Wow, it's been a heck of a run here. We've been in this area right here for quite a while. And, well, here's an example of what we should look for. If you have an ABCD pattern like this, okay, there's your ABCD leg. It tells you should get to that level right there. The problem is you've got a gap here, a gap here, and a gap here. That means it's going to go at least to 1.27 of that. So if you measure your 1.27 swing on JP Morgan, that's going to tell you should get to just about 273. We're only $6-7 away, so we'll put our limit minder in here to see if we get there. That means the ABCD, because of these gaps, is moving higher. And that's it. The one that's the most interesting from a gap standpoint, and I did a lot of work on this on Steve's show this morning, you'll get this daily here in NVIDIA. This is the one. That's the weekly again. Timeout. Let's get the daily up because we've got the number in here. All right, here's what we watched. You see this this is an island area, island reversal. Now, we've got a 1, 2, 3, 5-day rally island here. This was a 3-day rally. You see, if you close in the bottom end of the rally, of the gap, that's where you want to sell it. So that would take you, we're at 330, 334. The low today has been 332. So if you close below, let's just put this in here. If you close below 132, if you go below 132 and close right there, that means it's a short sale because it's in the bottom end of this island, and if it breaks to the downside, wow, you got a monster. But if it doesn't, you exit on the open. I mean literally, if it's at 132 and it opens at 133, 34, 35, it don't make any difference. It's got to open lower than these lows right here if it's going to be an island. You see that little red line? That's going to tell us. We're going to look at that for tomorrow. But that is a island. This was called the 3 black crows. I guess this is 5 black crows or whatever it is. Anyway, well, that's what we want to be watching here as we unfold here with NVIDIA for this right now. Now, oh dear, we got it. Oh, baby. Hey, that's my good friend Ed Dobson. I have to call him back. Haven't talked to Ed in a long time from Traders Press. Boy, we sold a lot of books over the past 45 years, but I'm going to turn that off. I have a new phone, folks, and I don't know how to operate the darn thing quite yet, but I will be working on it for sure. All right, that's the NVIDIA. Let's move on here to what else we have looking at. Let's go back and let's see how our wheat is doing. We should have, the beeper hasn't gone off. It should have hit that 382 or 61% retracement level in the wheat. Let's just see where it is. We're going to take a break. 877-927-6648.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, this is the euro. You can see we have a bullish bias the last few days of the euro. A profit objective up into here. Here's where we were, coming in here for a Friday. There's a breakout on Monday. That's a valid trend line. You can see the 61% retracement level right here. There's your 78. Once you break above that, just like you did in gold, boom, away it goes. I mean, that tells you that when you can see this much strength breaking out of that, that's how I made money during during 1968 through 1972, is buying these breakouts of these valid trend lines, and when they don't work, you get out of them right away. But right now, that's what it's happening here. You can see the pullback here early in the morning yesterday, and then late at night yesterday, and then again early this morning. Stopped right at the 382, and now we're moving back up above these levels here telling us we're going up to this 133 level. That's up another 60, 70 points, pips to make that. Now, what we should do is also look at the British pound, because that's the one that's got the most news out that is positive than anything, because they are going along with everything that our administration talks about. And we'll move over here, and you can see here we're almost there right now. There was your 382 here. That's a weekly. Larry, get the chart up so everybody can see it. There's where we are. There was your 382 on the daily right there just a few days ago. And look at this, we've been going higher ever since. We're going to refresh this. But watch this one, folks, because if we get above this 130, 134 level, that's going to break this out on the weekly basis. I don't know. You can see if we get above that, and we're not far away, there's your 382 from last week. We go popping above 134. You don't want to be short the pound, because it could go substantially higher, because you can see it could easily get up to this level here, or even go back and maybe test the 140s from 2021. Live every day in an attitude of gratitude. May God bless, and we'll see you on the flip side tomorrow, folks. Thank you very much.
Steve Rhodes